Hello, and welcome back to the Heartbeat of Money. I'm Jon P. Moffitt, and today we're going to dive into the 7 steps to win in 2026. This episode is dear to my heart because at the end of every year, I work with entrepreneurs in so many ways to start to prepare for the next year. And this year is very interesting because there's a lot of stuff going on in regulation, a lot of stuff going on with interest rates, and the environment's changing. And so what you want to be able to do is take advantage of all these changes and be prepared for them as you go in. So in step one, we're going to take a moment and just take a step back. And we're going to tell the truth about the numbers and what the numbers talk about. So before we talk about growth or AI for 2026, we have to tell the truth about what happened in 2025. What happened last year? And most entrepreneurs avoid their numbers until you're actually forced to look at them, until, you come down the road and you need money or you need financing, or you do your taxes in April, which is actually too late. And that's when they start to look at the numbers. But what I'm encouraging you now as you listen to this today is make it priority to start to look at your numbers. And this isn't about judgment. It's just about clarity. It's about getting clarity around where you've been so you can identify where you want to go. You can't improve if you don't take the moment and take a look at everything. So I want you to be reflective. I want you to slow down and be grounded. 7 steps that I'm going to share with you today. And I'm going to let you know that we're going to expand on this in a series for each one of these steps. And that's going to be coming up very soon in short order so you can actually get ready for 2026. And I want you to know why this matters. And here's why. Because lenders, investors, regulators, they're all tightening their standards. They're all looking at where the inflation's gone, where rate environment's going, and they're trying to protect themselves from any type of risk that might be coming down the road that they can't see or foresee. So if your books are sloppy, you're missing things within your books, it's going to slow your approval rate and you're going to get higher scrutiny as they start to go through your numbers. So what really becomes important is transparency. It's almost becoming a requirement, not like a bonus to people that do it, but it's almost required now that there's a lot of transparency. So one of the things I'm going to do in this episode is I'm going to give you some AI prompts and verbatim exactly what you should do. So, as you pull your profit and loss, your cash flow statement, your balance sheet, I want you to get those into a PDF. You can have them in Excel, it's fine. And I want you to put this into any type of AI that you're using. I personally like chat. It's simple. I know there's a lot of other ones out there. It seems to do what I need to do, which is give me kind of a second opinion, bouncing off the data that's out there and helps me think and get clarity around what's next. So I'm also going to put this so you can in the notes and also put it up here on the screen so you can read it. But I want you to analyze, and this is the prompt exactly. Put your stuff in there, attach it into the chat, and then and this is what I want you to type in. And you can take a moment and set this prompt up with a little bit about your business. It always helps, or a description about where you're at, who you are, and what you're doing. But here it is. So analyze this profit and loss statement and balance sheet. Identify 3 of the most important financial patterns, risk or opportunities that a business owner should be aware of heading into 2026. And when you run this, don't defend the results. Just read them, just absorb them. Just, take a moment and say, man, I didn't think about that, or ponder on expanding on what comes. And so, in the next episode, we're going to talk about how to use clean numbers with AI and lenders. They could actually trust your numbers because there's a lot of fluff in most businesses' numbers. As I dive into numbers, I see, there's expenses in it or shouldn't be in there. They're not tracking in certain categories, things they should be tracking. So one of the things we're going to do in our next episode is we're going to dive into your numbers a little bit more. And so that's kind of step one, getting your numbers, write a prompt, get a little deeper dive into what's going on in your numbers. And that will start to guide you in where you might want to clean up your numbers for 2026. Now, step two is actually understanding what makes you money. because revenue is not always the same as profitability. Revenue, for example, some sales feel really good. I had a business once that they took this really low end product, but by the time they gave the service of that low end product, it almost became like their middle product or high end product. And this was a service business, not necessarily a product sales. But when you spend a lot of time with a customer, because you like them or because you want to help them, you start to lose money because the hours you spend on that client, you didn't charge them what you should have charged them. And so now you're chasing bad sales. And some customers aren't always made the same too. Some customers just absorb so much of your time, or they complain, or they have a lot of returns. And it's okay to fire customers and move on to ones that are more profitable, the products that are more profitable. And this is where owners really start to feel the exhaustion. They put a lot of time and effort into a product or a service, and they come to find out that, oh my gosh, when I run the numbers, I actually didn't make any money on that product or service. So, you know, there's a difference between busy and effective. And what you want to do is create products and services that are effective, not just making you busy. And why this matters in 2026 is there's a lot of margin pressures. They're increasing across all industries. For example, labor, insurance, and compliance costs, they're all going up in almost every industry out there. So you really want to hone in on your products and services, what the profitability is there. What I would do is take a moment, list your products and services, list what you're selling for, maybe what your estimated cost for those products and services are. Put those in some type of Excel spreadsheet. You can write them on a piece of paper, take a picture. And then I want you to use AI, and I want you to put this prompt in. Using the sales data and profit margins by product or service, identify which offerings generate the highest true profit and which ones might be draining the resources. You're going to be blown away. Not only might it get which are high or low, but also give you some recommendation. You could always ask it also, how does this match up to the industry? How does it match up to some of the competitors in the area that are competing against me? And so we'll dive deeper into this in our next series as we go into a deep dive into this area. And we'll spend an entire episode on killing bad revenue, doubling down on good revenue. It's really important. Now, step 3, you want to get ahead of your taxes and your structure. Taxes are emotional because they feel like a loss. They feel like you're paying out money, but taxes really are feedback on your structure, the structure of your business, how you're establishing your profit and loss to your revenues and your expenses. And most people don't have a tax problem. They have a planning problem. And so what I challenge you is to ask yourself, how much time do you spend on planning your structure so that when April rolls around, you're not surprised? And this starts now. This starts more at the end of December now. And January is, we're moving right into it. So this is when you really want to start focusing on what happened last year in your numbers. And this is why it matters in 2026. The increase in IRS enforcement and data matching is coming down the pike. And so they're more focused on pass-through entities, the payroll classifications and deductions. As you know, there's some regulation out there that's changing a lot of that. And so there's less tolerance in gray areas for this behavior. So this is the prompt, the prompt that I want you to think about putting in there and using for this specific topic. So based on these financials, identify potential tax planning considerations, entity structure questions, and areas where a business owner should consult a CPA before the next tax year. And let me tell you, it's really, really important. AI does not replace your CPA. It just prepares you better for a conversation with a CPA and gets you ready so you can ask the right questions. So we'll go deeper into tax strategy and entity planning early in the series as we go forward here. I'm just kind of giving you a real high level of some of the areas that we're going to be talking about. Step 4. This is one that's I probably talk about the most, and it's dealing with high interest debt and capital costs. Most people don't really focus on their interest costs. even though it's a line item on their financials. But high interest debt creates an invisible stress that you can't even imagine. It impacts decision making, it impacts your sleep and your risk tolerance. Many owners normalize expense capital because they don't see an alternative. But capital should grow, not choke it. You should be using your capital to grow. And what happens is if you're not set up in the right products, it actually chokes the business. This is one, hurts the most. And this is why it matters in 2026. Credit markets are more selective than they've ever been. SBA just pulled back on some of the things that they're willing to actually refinance and restructure. So short-term, high-cost capital is under regulatory scrutiny right now. And businesses will need to clean up their capital stack to scale or refinance. So what I really would like for you to do, here's the prompt that you should put. And you should have a debt schedule. If you don't know what one of those is, you can go on to one of my websites or my website and get a link to a debt schedule. You can also just search it online. It basically just outlines the structure of your debt for each one of your entities or your entity that you have. So here's your income. Review this debt schedule and cash flow. Identify which obligations are creating the most financial strain and suggest strategic questions that the owner should ask about when restructuring and refinancing. And let me tell you, now we're going to dive deep into this series. We'll break down smart capital strategies, how to position for better money. This is the year to restructure, refinance. With the pressure of interest rates coming down and the inflation costs, where it is, and even maybe increasing in some areas, it's really important to restructure your capital and take advantage of some of these low interest rates. Now, it's not a time to go leverage yourself and grow. It's a time to pay off your debt. Hey, now get structured better. Take a moment, and this is the year to do that. So, step 5 is about expansion, but expansion is with discipline, not just excitement. Expansion isn't always growth, right? Growth without systems can create chaos. So, it might be as simple as creating new systems. That's how you're going to grow this year. Many owners expand because they're bored, not because it's strategic. I'm bored. I've been doing this for a while. Let's expand. But more importantly, you should hone in on systems that can expand you. And expansion from systems can create more profitability and more revenue. The right question is, and what is the business actually ready for? That's what you should be asking yourself. What's next? And why this matters in 2026 is because regulatory, labor, and compliance complexity increases with size. And as you get bigger, there's more complexity. Expansion magnifies weakness. So if you expand and you don't know your weaknesses, it'll show you where your weaknesses are. So investors and lenders, they want scalable systems, and they don't really want just heroic founders. They're out there just trying to grow because they feel the ego that they need to. Here's a prompt that you can use in AI. Based on these financials and operation matrix, assess whether this business appears ready for expansion and identify key risks that should be addressed first. You'll be surprised at what comes up there. And just read it, take it, ponder on it, think about it, and it will help you. And then if there's some short items that you think that you can fix right away, then you'll get in and get ready to expand. And we'll talk about sustainable expansion and when not to grow in our series as we're going to lay this out. Now, step 6, align your people with the next version of your business. Okay, now it's important. What is the next version of your business? People issues are business issues. Loyalty matters, but alignment matters more. Just because you've had somebody with you for 20 years doesn't mean they're the right fit. Some roles fit the past, not the future. It's important to take a step back and take a real honest look at each role and each person in those roles and how they're affecting your business. Leadership means clarity, not avoidance. Avoiding these, long-term people that have been with you a while that aren't looking to where the company's going, but where the company has been kind of stuck in that place will hold you back in your business. And you have to make some strong moves as leaders. And this is a good place to slow down and connect emotionally. And here's why. And this is why it matters so much in 2026. Labor laws, classification rules, and wage pressures are all evolving. And so if you're not ahead of this and looking to make sure that you're getting the most out of each one of your positions, you're leaving something on the table. And productivity expectations are shifting. Business will judge by culture and compliance. And you have to understand that with some of the technology today as tools, you should be getting more productivity out of that same position, where you might have to hire somebody additionally in the past. You're probably not going to have to do that in the future if you're using the technology and the tools around what's out there right now to grow your business and to help each person at each position become more efficient and effective at what they do. Now that's getting people used to AI or getting them used to new systems. But it's really important. So here's a prompt that you can use. Analyze payroll, revenue per employee, and role structure. Now you have to put the roles in there, but identify potential inefficiencies or misalignments that suggest leadership questions for improving team performance. Now, we're going to dive into this. We'll do a full episode on leadership, roles, and team structures and how you use AI to help you with that as well. Now we're on to step 7. Using AI as a strategic partner, not a toy. AI is not magic, okay? It amplifies clarity or chaos, whichever one that you are putting into it and however your business is set up. The business that win with intelligent AI into finance, operations, and decision-making are the ones that had clear financials and start to identify in each one of their categories where their shortfalls are and try to shore those up. Because data in is data out. You have to have good information going in, you have to have good instructions going in to get the information you want out. But I can tell you from me working with it throughout my businesses and working with other businesses, that you have access to some of the best knowledge out there using this technology. And this isn't about argumentation or replacement. It's really about an additional tool that helps you move forward. I want you to know why this matters in 2026. AI regulation is coming. Data privacy is coming. Disclosures and usage standards are coming. And businesses that learn AI now will adapt faster than later. Financial intelligence plus AI equal competitive advantage. And so here's an AI prompt that you can use based on your business and where you're at today. What you want to do is kind of set up what your business is. You have all this financial information. You just asked all these questions, and now you're down to this step 7. So based on the business financials and operational data, and this is the prompt, based on this business financials and operational data, identify 3 practical ways AI can improve decision-making, efficiencies, and profitability over the next 12 months. You will be blown away at some of the recommendations that will come out of there and how you might not have been thinking that way, but they're simple thoughts that you could have had. And it's just that second person that we all always kind of look for. So we're going to dive deep, and we're going to go deep into AI across the entire series. And I want you to kind of have this key idea to land. You know, I'm not here to sell you high. I'm here really to help you think clearly about your business and where you're going in 2026. I would love to take a deeper dive with you. I'd love to dive into your business and help you if you're kind of skeptical on how to do this. I encourage you, for absolutely free. I'll have a call with you and we can set up and we can talk a little bit about your business, talk about some prompts you can use. I really would love for you to book a discovery call with me. And if you want help interpreting what you find, that's where the conversation starts. If you go through these 7 steps and you kind of get some information on that, you just want to talk about it and have somebody to bounce this off of, that's what I'm here for. So it was such a great year this year. I thank all of you for being part of the Heartbeat of Money. And I look forward to this series and diving deep into these 7 steps so that you can rock out 2026. Thank you so much. I'm your host, Jon P. Moffitt, and we'll see you in the next series.